Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, looking stellar as always, Mr. AJ Brown. Good morning, AJ.
Episode 101, Sip. I would have never thought we'd get here, man.
Well, we had a great episode last week with Coach Jay. We had an even better episode before that with Serge. A lot of the same topics, a lot of the same discussions that we've been having. Today is October 6th. And the big headline as of this morning, as of maybe a few hours ago, is that employment number. So, AJ, where do you want to begin? What are you looking at? What do you think is going to have the biggest impact on the sentiment that you're talking with the community about, and some of the positions that you might have on?
Sure. I mean, as far as the community and the positions that we have on, I mean, there's this overall kind of drag on the market, and it's basically a lot of hearsay, a lot of like, because no solid data is coming from any sources, because the Fed is actually admitting they don't know what's coming next. You're leaving a lot of people guessing without answers. And so that causes these swings in the market, but kind of an overall, almost a negative sentiment. Today, speaking of that employment situation, let's take a look at what we got. So if you take a look at these employment numbers, I mean, they are stellar, aren't they? You've got last month in August, they reported only 187,000 jobs were created. They went back and they revised that number up almost 40,000, 227,000 jobs. But even more, analysts were expecting only 160,000 jobs to be created this month, and instead they reported 336,000. That's like over twice as much as expected. That's really exciting. At the same time, analysts expected the unemployment rate to drop, and it stayed steady at 3.8%, which is still overall in time, since we've been measuring unemployment rate, that's still on the lower side. So that's not that big a deal, although they expected it to dip lower. And what's interesting, Sip, is these two numbers come from two different surveys that the government does. So this is a survey of employers. This is a survey of employees, basically. And so it's interesting that employers are saying that we're hiring all these people, whereas employees are saying nothing's better for us here in the employment world. That's interesting. But at the same time, also private payrolls were up higher than expected. Manufacturing seems to be really exciting. On Monday, we got a report from the ISM group, and they said manufacturing was better than expected. The participation rate is strong. Average hourly earnings. This is a positive for inflation rate hawks, because this is only at 0.2%. If we take 0.2% and multiply this by 12, we only get 2.4. So it's basically saying that wages are only going up 2.4% this upcoming year. Guess what? The Fed wants it to be around 2, maybe 2.5%. We're pretty much there with our employment numbers. So, you know, some of the folks are worried about this number being too high, which would normally be good news. But does that mean more interest rate hikes are coming? But then they come and they look at this number and they're feeling a little bit of solace. All to say, I think it's good news that's going to be good news, meaning I don't think this would be a reason for the Fed to continue to raise interest rates. At the same time, the CME polls investors, and I just wanted to point out this little number right here. So, as of right this minute, investors think that at the next meeting, which is going to be 1 month away, November 1st, that the Fed is almost a third of investors polled believe that the Fed is going to raise interest rates by a quarter point, whereas 2/3 say they're not. But yesterday, if we look one day ago, this was 80% saying nothing was going to happen and 20% saying it. So basically, overnight, since that employment report came out, investors have kind of migrated from nothing's going to happen next month to I think there might be an interest rate hike next month.
And and could you maybe dig a little bit further into the good news might not be, or good news might be bad news, right?
So
Because
I think that this right here is a knee jerk reaction, mostly to the headlines that are coming off of, a lot of times when an employment report comes out very strong, that's great news for employers and employees. But at the same time, it usually means with a Fed who's trying to slow things down, it means that the Fed will probably tighten things. They say, "Oh, things are still going too strong. We're going to tighten things." But I think when you dig down into these numbers, and usually, investors tend to make these knee-jerk reactions based on headlines. But I think as people start to delve into these numbers, I think this might moderate a little bit, and investors won't be so believing that the Fed is going to raise interest rates. I mean, the Fed is going to look at so many different things before they raise interest rates. And remember, the Fed has three big tools, and they're using all three of them right now. They've got the interest rates. They've got their rhetoric, which this last time that they met, they were very hawkish in their rhetoric, saying that they may have to tighten more. It's not enough. We're not going to see interest rates going down anytime soon. Things like that. And then this third tool that a lot of people don't pay attention to, but this week, because of bonds being so almost volatile, we have to go back and revisit how the Fed had purchased a whole bunch of bonds ahead of the pandemic to the tune of approximately, 5 to 6 trillion dollars worth of bonds. And when the Fed buys bonds, they basically buy them with electronically created money. At this point in time, they've been selling those bonds off. And when they sell those bonds off, they then shred the money that they originally created out of thin air. It goes back to thin air. They're basically taking money out of the economy. It's very similar to how they're trying to slow the economy with interest rates. It just affects a different aspect. It's two different ways to slow down the economy. This particular way is a newer way. It never got used until about 2008 when we had the Great Recession. That's basically how the Fed was able to get us through the Great Recession. We went from a balance sheet of about 800 billion to a balance sheet of around 2 to 3 trillion to get us out of that issue, and then to get us out of the Fed, the pandemic issue, they printed another 5 to 6 trillion. So in order for this tool to be useful in the future, they really need to reduce the balance sheet. And they are. If I zoom into just the last 6 months, you can see we're right back. We were up at 9 trillion of created money, and we're down at 8 trillion. So they already got, over 10% of it, squashed. And they really want to bring this number back down to the 4 trillion number. So in the last year, they've basically shredded $1 trillion worth of money out of the economy. The reason why I'm bringing that up, of course, is because this week the phrase du jour is high bond yields, right? And this quantitative easing, or the reversing of quantitative easing, will directly affect those bond yields. So I almost wonder if the Fed might take a little bit of a break until the other bond investors get a little bit more sure of themselves and stop doing this run on bonds that's been happening.
Yeah, that was going to be my follow-up question, is more along the bonds, because I see a lot of the headlines, whether it's the 10-year or the 30-year or mortgage. And so
Going through the
and so
roof.
how is that essentially affecting the market and or any decisions that the Fed might make, right? So
Mhm.
is there a correlation if those bonds continue to go up? Does that mean that the market is going to feel the pressure?
I mean, what are investors using in order to buy these high yield bonds? They're using their stock money. So they're pulling money from the equities market and putting it into the bond market. And that's in addition to this selling off of bonds, in addition to the interest rates, it's causing this snowball effect, right? I have to say that if you look over time with the Fed's meddling, I can't think of a better word, but their adjustments. There's only one time in the, 90s that they were able to create a soft landing. So I'm not saying that a soft landing is still not possible, but if you look at how the Fed has adjusted things in the past whenever there's some sort of financial crisis, we almost always put ourselves into a slight recession right after the Fed meddling. They never quite get that soft landing. There's only been that one time in the 90s, early 90s, where they were able to kind of get us in without putting, slow us down without actually reversing us into a recession. That kind of goes back. I tell my followers that there's this phenomena in the markets called the bull climbs up the stairs and the bear jumps out the window. And that has to do with when you're feeling confident, even the most confident investor doesn't throw all their money at one investment at once. They usually take a couple of dollars out of savings, put them into what's perceived as a riskier investment. If that does well, they'll add more and they'll add more. And so you see these bull markets slowly gaining momentum. But as soon as any sort of fear happens in the market, it's not like they slowly take the investments out of the stock market. People will take the whole investment out of the market and put it in, they'll even bury it in their backyard in a jar. That's what happens when the bear jumps out the window. So these thoughts of being able to slow things down gently, it creates this hysteria, and that's basically what we saw this week. We saw a lot of people jumping to the bond market, and it's causing this snowball effect with bond yields. And yeah, I think it's going to be interesting to see if the Fed actually can do a soft landing because the odds are against it.
Yeah, and I mean that's kind of what we as consumers we want a soft landing. It does make me think about the conversation we had with Serge, where he
Mhm.
essentially said we may have this false rally, right, heading into the end of the year, and then at the beginning of
Mhm.
the year, the realities of inflation and I would throw the government
Mhm.
spending into the mix too, because I keep seeing those headlines and I can't believe the numbers that are coming out there. Along
Mhm.
with oil still being fairly high. And so do you see that? Do you see that in the charts? Are we starting to see a little bit of, hey, the news is well, looking at the chart now, we still have this pullback, but if we consolidate and stay positive through the end of the year, it still seems like we're going to be in this range for quite some time.
Yeah, you and I talked about this number at 4,600. Let me go ahead and pull back. Remember, I have this really well annotated chart right here. So we have this level up here at 4,600. We know that there is massive resistance at 4,600. So to get above that, you would have to have such positive news. You would have to have the Fed not keep talking about hawkishness. You'd have to have the Fed stop meddling, and if anything, kind of pull back some of their recent rate hikes and stop the reversal of quantitative easing. By the way, none of that's going to happen anytime soon. That's kind of what Serge was pointing out, is that the Fed flooded the markets with so much cash through the bond markets, 2 or 3 years ago, and the fact that they have to come and shred that money means that it just science tells you it's not possible for the market to reach any higher if the Fed's got to shred $5 trillion of the money that it injected into the market not too long ago. So, I think they say that our market here in the States is something like 25 to 30, maybe as high as 35 trillion every year. Just think if the Fed was to somehow erase that 5 trillion in just 1 year, that would cause a huge, they're planning on doing this shredding, if you will, over the next, maybe 5, 6 years. Slowly, it took them a whole year to erase 1 trillion. So they're not going to try to affect the GDP any more than it already is, but this constant drag that they're creating just by unraveling the quantitative easing, not even talking about interest rates. With that said, yeah, there might be a holiday rally. A lot of the signals are pointing towards that. But right now, we're basically in a confirmed downtrend. It's not even that the uptrend is under pressure. There's just so many reasons why a downtrend can continue. Right now, however, it's more of a downtrend that is not a ideal downtrend, meaning there's a lot of sideways chop. And that's perfect for us option traders. I mean, we've got the ability to make money in any situation, but especially when it's sideways choppy, as we're looking here. And one other data point for us investors is that VIX.
Mm.
Check this out. The VIX has been slowly going up, especially this week. Oil prices actually took a little bit of a retreat, didn't they? They were almost pushing $100 a barrel. They're back down around $85 a barrel just this week, which means we'll start seeing it. Usually the prices at the pump take about 3 to 4 weeks to trickle down. So in about 3 to 4 weeks, we'll start to see the price of gas come down, so long as oil prices stay at that $85 a barrel. With that said, the VIX, the uncertainty, it's back up at that all-time mean, which was around $18, $19. I think right now we're at $18. Getting above this mean means we start getting into that fear versus confidence reality. Right now we're in that right on that verge of being kind of on the I need to protect myself mentality versus things are going good.
Yeah, and it seems like today's news is the volatility is pulling back a little bit, the market's pushing up a little bit. It's as of this morning, it's taking the news as being positive. So we'll continue to keep an eye on that. For
Mhm.
anybody that's new watching or listening, direction really doesn't matter too much to what you and the crew here is doing because of the premium selling concepts and utilizing options. Sometimes flat and uncertain is good because we're using time to generate the passive income. And so with that being said, let's go ahead and give everyone an opportunity to learn a little bit more about these strategies, about Trading Trainer. So AJ's got a wonderful daily workshop where he breaks down these strategies, kind of goes over everything that he's been teaching his students for the past 20 years now. And so going to go ahead and throw that link in the chat. As always, this is a live broadcast. So if you have any names, any tickers, any positions that maybe you have put on in the past that we've covered that you want us to review, feel free to throw it in the chat. Otherwise, we've got some more news and topics and discussions to talk about later in the show. We've got our topic of the day. We've got AJ's pick of the week. We've got our speed round. So we're going to go ahead and take a short break here. We'll be back and we'll dig into some more options stuff.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ. So the exciting news from last week's episode was your evolution of these strategies into some indicators, right? The exciting news is that we're going to start to have more tools for our users and our members to start to utilize. And um, do we want to do we want to just go over that real quick?
Yeah.
Did we get good feedback after the show, or are people
We got
downloading?
great feedback. We started to track the number of downloads. So, folks, you guys can go and get my free Thinkorswim indicator. You just sign up for a free access to the web portal. I'm going to log into my access to the web portal. I actually have access to the premium selling program. So you'll see a couple of different menu items that are different than what you see because I have access to the actual paid program. But all of us under this download center on the homepage, whether you have free access or paid access, you have this button that says bonus downloads. And from that bonus downloads, we created a very thorough tutorial on how to download the indicator and how to install it into your Thinkorswim. Um, and I wanted to announce that later this afternoon, we'll be providing our first update. So if you did download, or even if you didn't download that, you should come back this afternoon and re-download it and re-update it because this indicator is being updated. So let me show you. We got so much good feedback, Sip, but a lot of folks said, hey, we do your retracement analysis, but we don't do it based on a moving average crossing. We do it based on the MACD crossing, like a fast MACD or a slow MACD or the extra slow MACD, the normal MACD. And your indicator should be able to give us that instead of just a moving average crossing. And we'd like to still employ that kind of special sauce of yours, the filtering component. And so we listened, and over the last week, we made an update. So let me show you what that looks like. So our little indicator here, if you come on over here and look at the configuration, actually, this is, I have to, that's the old indicator. Let me go ahead and swap that out really, really quick. I'll get rid of this guy. Let me throw in volume as well. So let me do a couple of things here, Sip. Sorry about that. I should have been prepared a little better. Get rid of this guy. And now we're going to put our new one in there. This is called the retracement analysis. I'll go ahead and apply that, and I'll save that, and I'll call it retracement analysis so I can bring it up faster in the future. There we go. All right. So when you look at the settings here, you'll notice that you can do the calculation mode now. You can do our standard, which is a moving average crossing, or you could do the MACD crossing. So if you do the MACD crossing, maybe instead of the 3 and 5 EMAs, you're going to do a 6 and a 19. These are the standard numbers for the fast MACD. And now you've got the MACD length, which is a 3. You can turn on your filter, and now it's using the fast MACD versus the exponential moving average. You can see these arrows, but I'm going to make these arrows nice and visible for you. I'll use a slightly different color and make them nice and fat and big. Same with the below signal. I'll make slightly different color, nice and fat and big. And now you've actually got your primary indicator being those MACD crossings. And it's, uberly flexible and configurable. So you can use all sorts of goodies that you could use instead of the close price. You can use, the high, low, and close average together. You can use VWAP, which brings up some really nice responses with volume weighted average price. You've got different moving averages. You don't have to use exponential. You could use simple or weighted or some of those other. And then, of course, our special sauce is our reversal filter. That's not something that comes standard on any indicator out there. So, yeah, we can use this and we can actually see that a bottom signal hasn't been indicated, a primary bottom signal hasn't been indicated on the S&P right now. This indicator is going to be uberly useful with this new update. So like I said, guys, gals, and everybody else, all people, you should go into our website. Wait for, it's going to take us about an hour or so to upload it. But once it's there, you should download it and get your latest version of this with all the extra bells and whistles.
And we just threw the link to how to access that in the chat. So head on over there and sign up. Also, I think through the show, as we go through some of these examples, maybe let's just see how the indicator reacts to
Sure.
our typical analysis and the benefits of having that there. So with that, let's dig into a few names. Let's dig into a few opportunities. But before we get into your pick of the week, we did have a comment come up with a name that I've been seeing a lot in the news this week, and I'd be curious to get your take on it. And that's Coca-Cola, ticker symbol KO. I believe they're at like 52-week lows or something like that.
It's true. I've been hearing the same thing. So, Coca-Cola, as you can look back over the last year, they had a real drop in price yesterday. It was all over the headlines. Today, we're seeing an uptick. I'm going to go back even further than 1 year. I'm going to go back to 2 years. And you can see that, Coca-Cola is one of those sideways channeling companies. They make money every quarter. They give quite a nice dividend to its investors. Coca-Cola is typically a company that we do like to sell premium against, but they did take this little bit of a dip. In fact, let's go back even further than 2 years. Let's go back 3 years, and you can start to see that, Coca-Cola over, especially the pandemic time, started a little bit lower. We're getting into those ranges from back when we were still all locked in our houses. And remember, Coca-Cola is a lot more than Coca-Cola these days. They've got water, they've got nutrition brands, they've got all sorts of different brands under them besides just the original Coke. So we had this little sell off. Let's bring ourselves back to the current time here. I'll look at about 6 months of data here. We had this sell off. We're seeing some buying on the dip today. As far as selling premium, um, I think we need to wait to see what happens with Coke in the future. I haven't yet got a buy signal, which means even though there is some buying on this dip happening right now, it hasn't been a confirmed, this is actually the bottom. There, what our indicator is saying is that there might be further selling to have happen on Coke. So I'm not ready to buy on the dip. I'm not one of those investors that just buys out of emotion, thinking that things are oversold, right? Um, so we're gonna wait, and I almost want to wait for Coke to mature and create for me some tested lines of support and resistance. A lot of times, what happens is we find a new level of support, and then we'll find a new level of resistance. We'll test it a couple of times, and that becomes my new premium trade. In the meantime, for me, looking at Coke, I'm just going to be watching it. If you were in any sort of trade on Coke, you've either gotten stopped out or your protective put has profited through the roof. It's either offset your initial position, or if you got stopped out of your initial position, your protective put is, paying you back big time right now. If you were in the opposite trade, like a covered put or a bear put diagonal debit spread, you're doing well as well. You probably have crossed your expiration price if you've got sold put, and so you're going to get cashed out at max profit. Or if you're just in your initial position and you were waiting for that opportunity to sell new covered puts, that opportunity, I would suggest to you, has passed, and you should instead look for an exit. Wait for that signal. So there's all sorts of good news that comes out of this type of move. And I would exit my positions and I would wait to get into new positions until it matures.
I can imagine this being a big like portfolio holding name, like a lot of the mutual funds, a lot of the retirement accounts, and if you're seeing the pullback in your portfolio, options is probably a great thing to consider now because that is your insurance policy to at least make up for some of these losses. So
Mhm.
if you've been holding Coke or if you're looking to get into it, I agree with you, AJ. That this is a pretty dramatic fall, but you want to see if it can find some support. And
Mhm.
given the nature of the brand, it probably can, and it probably can find a way to get back up to those levels. But you never know. You want to make sure you have some of your confirmation. So
That's right.
that's our live analysis there. Coca-Cola will keep an eye on it.
As
Let's go
soon
ahead.
as just a note, as soon as Coke is out of the news for whatever, shenanigans happened in the last couple of days, I have a feeling that investors will come right back to Coke, and this is what we call a transient external stochastic shock. So we'll probably see Coke resume some sort of sideways choppy channel. The investors that are attracted, you described them perfectly, Sip, and they like things that just go sideways and pay them dividends. So you just got to wait for it to get out of the mainstream news. We here don't like to trade news items because it can be such speculative, you know, hearsay. So just wait for it to get out of the news and it'll recover fine.
Yeah, and it's such a legacy name with legacy sales, and I
Hmm.
mean, it's probably a short term effect, but
It's a very well run company, actually.
so that's Coca-Cola. All right, let's dig into your pick of the week.
Hmm.
What are you keeping an eye on? Where are you seeing a solid opportunity? And this is a name we've talked about in the past, and this is Roku, ticker symbol ROKU. What is the play? How can we get involved here?
Well, you can see that I got my confirming indicator. So I've got my confirming indicator set up for the MACD, the fast MACD, and I've been using the fast MACD to trade Roku for the a while now. And you can see that I got a buy signal, but it wasn't confirmed until about Wednesday. On Wednesday, I got a confirmed indicator on the end of day. So these arrows, at least the way I trade them, are end of day signals. And then I look for confirming. I didn't get confirming on Monday or Tuesday. This was a Friday evening signal. But on Wednesday, I got it. And today I'm getting yet another confirming signal. And so what that's telling me is that Roku might be a great candidate to set up an initial position on so that we can sell premium in the future. Every time we get one of these red arrows and it's in this $85 to $90 range, we can go ahead and sell premium on it and start creating that income engine. Now, Roku does lose money every month, every quarter, and Roku doesn't give a dividend. So, one of those thoughts in my mind is this is a fantastic candidate to use leverage on because I'm not trying to add this to my portfolio for the long term. This isn't one of those companies I just want to have stock in, like some of those other names I've mentioned. So, let's take a look at how we would create or how we would find that perfect substitute option. So I want to go far out in time. I don't want to worry about expiration dates when we're talking about substitute options. I got a leash. I'm on a leash here.
Yeah, me
So I'm
too.
thinking I'm thinking June 2024 or even January 2025. I want to go that far out in time and I want to buy an option that's pretty deep in the money. And one of the things that's really easy to do is just take your calculator and take the extrinsic value, which is a column you can pull up in your option chain, divide it by the mark, and if that number is under 5%, that's an option I'm interested in. So we'd find an option that's around there, maybe this 40, maybe this $45 strike price, something like that. Seems like it might be where we're interested. Actually, maybe a little bit less, maybe the $35 strike price. You can see in the bid ask spread for this that it is still heavily traded, so we're not worried about liquidity so much. And you can see that instead of buying these stocks for $71 a share, I'm getting quite the discount at being able to buy it at about $39.35 a share. So I think I would go that route. I would buy this option, maybe a June 35, and I would buy contracts of this option, and this would then set me up to be able to sell premium in the future. And so that's the signal I'm seeing today. I recommend people, if you don't know much about Roku, this is a perfect opportunity for you to paper trade it and see if the trade would work out for you.
And when you say the strike price of 35, what kind of capital uh commitment are we looking at to take this position on?
So instead of coming up, so remember, options are sold in lots of 100. So if we were to use the stock in order to create that initial position, you'd be talking about this $71.40 price times 100. So $7,140. But if you use this substitute option I'm talking about, you're almost half that price at $3,925. So for every contract you want to buy, it would cost about $3,925.
And that's kind of the reference of the leverage, right? So you could either
Mhm.
go the more leveraged route with the options, or hold the stock outright and earn the premium. And that's something that we've been covering for over 100 episodes now, and it is one of the core strategies, or core methodologies to this approach of using options. And
Mhm.
so that's Roku, AJ's pick of the week, ticker symbol ROKU. So we'll keep an eye on that, maybe revisit it next week. But that's the setup. All right, let's get into our
Let's look
speed
at
round. Or let's do GM. Yeah, that's been in the
so
news, and we've
G-
covered it a few times.
yes, we've been talking about GM. And this auto strike is really weighing in on GM. There's going to be news this afternoon. The head of the UAW is going to speak at 2 p.m. So it's going to be interesting what he says. He's going to give a commentary on the negotiations to date. But it seems like insiders have been telling us that it's a very heated discussion. I mean, Ford is ready pretty much to concede to a lot of the UAW stuff, but I don't know about GM or Chrysler. And you can see that investors are starting to get, for a while there, they were like, okay, strike, it's okay. They're starting to sell off this week. And I actually got a signal that I acted on. So I got out of my initial position at a very slight loss. I mean, we're talking about fractions of a percent. I'm actually waiting for another buy signal, which I think as soon as this strike talk is done and GM is no longer in the everyday news regarding something negative, I'll get my next buy signal. I'm just going to buy at a lower price. So I did go ahead and liquidate that position at the slightest of losses. You can see where I got my entry signal and the follow through, and you got my exit signal. We got a little like percentage. I think it was like a 1/4% loss, but I'm looking to get in at a better price to be able to sell premium in the future. So I want to let people know I'm still very excited for GM in the medium to long term, but I couldn't ignore this news any longer.
Yeah, and they just have to tackle this strike,
Get
this
past it.
short term. Yeah, because in terms of their technology and the evolution of their own brand, it seems like they're doing the right things to be competitive again in the
They
space with
are.
the
But right
eh,
now, Tesla is eating their lunch, man.
hey, it might be short term. GM has been in the game for quite some time, so I'm sure they could find a
Mhm.
way to compete in the future. So that's our recap of General Motors, ticker symbol GM. We've got 3 speed round questions, speed round names. Let's go ahead and run through them and see if there's some opportunity in any of these. The first one is Bobby from Knoxville, Tennessee,
Mhm.
interested in financial name, Ally Financial, ticker symbol ALLY.
Bobby is one of our paid uh, participants, and ALLY has been coming up in our workshop every week for like the last 3 weeks. Every week we have a Thursday workshop where the users submit the paid users submit candidates to me and Coach Jay. And Coach Jay and I will hash it out and talk about the pros and the cons of each candidate that's thrown our way. It helps our folks, hone their ability to pick underlying symbols to trade options against. And Ally has been coming up. And when it comes down to it, where we actually, the other part of our Thursday workshop is where we actually will take the candidate that everybody votes on and that Jay and I like, and we'll take it and we'll plan it out and we'll prepare it for doing a nice premium selling trade on. And Ally just keeps missing the target every week. And so I guess Bobby was tired of waiting to see when Ally actually gets its ticket called. And so Bobby's bringing it up during the AJ Brown show. So that's kind of cool. I like that. So you can see here, again, I'm making a lot of use out of this retracement analysis candidate by setting it over to the new setting for the MACD, because that's oftentimes my primary indicator for knowing tops and bottoms in these premium selling trades. And so what you can see here is that we've gotten our top, we've gotten our bottom last time. We haven't yet gotten our bottom yet here. And it's not outside of our zone to think that it's possible for Ally to come back into the channel that it established a couple of months ago. So I'm actually excited about Ally. My only suggestion for you, Bobby, is that you don't do anything till you get not only your indicator, your primary indicator, but make sure that you have on the day of trading or end of day any validations that you apply, but then on your day of trading that you make sure that it totally meets all of your requirements before you start setting up this initial trade. Everything is falling to correlation with the broad market, and the broad market has this current sentiment, perhaps maybe a medium to long-term sentiment, nobody really knows, of sell-off. So we need to be aware of that because the tides are telling us that things are selling off. So we need to make sure we pick sectors and stocks that are going to buck that. I think Ally could buck it, but I want to wait for the signal.
Yeah, and that was going to be my follow-up question in terms of just the financial sector. If the rates continue to go up over time, will the financial names be hurt by that?
We all have to bank, don't we? I mean, the scoop is they're going to find they're finding different ways to make money. In fact, they're finding, interestingly enough, more legit ways. When interest rates were zero, they couldn't make money the traditional legitimate way by, borrowing money from the depositors, paying the depositors a certain interest rate, and then loaning that money out at a higher interest rate because there were no interest rates. Everything was zero. So they had to come up with all these like cutesy programs and different clauses that, came under question from a legality perspective in many of these banks, whether that's a legitimate way for them to make money. With higher interest rates, banks actually have a way of producing profit by not having to go to these extraneous measures. So I don't think banks have a huge problem unless, depositors lose credibility in a particular banking name. But so long as the banks are doing what they're supposed to be doing, I think banks are going to be fine.
Yeah, that, and if they're not over leveraged in certain areas, like we saw with the Silicon Valley Bank
Yep.
situation a few months
SVB
ago. Yeah.
and Signet, another one.
Yeah. So we'll keep an eye on that. Financials interesting industry over the next coming weeks, months. So thank you for that, Bobby. Moving on to our next name. This is Thomas in Santa Fe, New Mexico, interested in another name that I keep seeing in the news, and that's Rivian, ticker symbol RIVN. And the story that I keep seeing is that the cost of manufacturing the car is far outweighs the cost at which they're selling the car, and how long can they continue to maintain that?
And not only that, from what I understand, they actually want to lower their prices to compete with Elon lowering his prices on Tesla. But yeah, I heard that like on their Rivian trucks, they're losing close to $30,000 per truck that comes off the assembly line as it is. And then they're talking about in their interviews that they'd like to somehow figure out a way to reduce the price of the Rivian by another 40,000, reduce the price of the Rivian to the consumer by another $40,000. I think one of these trucks costs like 100 grand or something like that. So they want to bring it down to the $60,000 price tag. But if you're producing a $100,000 vehicle and it costs you $130,000 to produce it, you're already losing 30. If you lower the price by 40, you're going to be losing 30 plus 40, $70,000 per vehicle. They've got to figure something out. And I think they're hoping that through, increased orders, they can somehow get volume discounts on parts. I'm not sure what their thought is, but investors are somewhat recently excited about Rivian, right? They were trading as low as about $11.50, something like that. They've been trading 17.50 all the way up to 27.50 over the last 3 months. I think there's positive news in them actually doing deliveries. I was driving around here in the Washington D.C. area, and I actually have seen now twice that Rivian SUV. It's not even the Rivian pickup, but it's the Rivian SUV driving around. So, and I think it was two different vehicles. It wasn't the same vehicle. So they're doing it. They're delivering.
They're nice cars at the end of the day. It's just can the company make money and survive no
Yeah,
matter how nice the car
ultimately
is.
a business needs to make money, and especially if you need to borrow money to keep going, the borrowing costs are much more expensive than they were even a year and a half ago. With that said, I would need to see my signal, but Rivian looks like it may be setting up for a buy signal. Now, it's a very speculative play. If I was to do the trade planning around it, and my trade plan would say something around position sizing of, I'm just pulling numbers out of my rear end, but position sizing of 4 contracts or 5 contracts, I might have that or even do less. This would be more of, um, me wanting to just support Rivian, but not lose my whole portfolio betting on a company that hasn't yet proven themselves. So I would minimize, I would, use less than the maximum amount that your calculations give you for position sizing. And I would wait for that clear buy signal. Um, I see some buying on the dip. There was a big dip yesterday. I see a little bit of buying today. I might wait through the weekend. And I almost want to tell you that maybe Rivian's worth paper trading for a little while just to get comfortable with them being in the news and them having some negative headlines, having some questionable headlines. Maybe paper trade them and see if it's something that's easy to trade and predictable to trade. Yeah.
Yeah, maybe a little too exciting for the names that we like to get into, but definitely worth taking a look at. So thank you for that, Thomas. Heading into our third pick of the week, another name that we've covered on the show very often, and this is Ann from Dallas, Texas, interested in American
Mm.
Airlines, ticker symbol AAL, which I would assume gets hit hard by the fluctuations in oil on a week to week, month to month basis.
I mean, thankfully, futures help buffer that. Futures was actually created for airlines and trucking companies because you can basically, with a future, lock in the price of a barrel of oil so that any fluctuations that occur, you at least can budget around a locked in price. But with that said, are we bottoming? We got a bottom signal, but we haven't quite confirmed it. I guess we confirmed it maybe here, and then we're confirming it just now. But if I go back and I take a look at 6 months. Am I in a downtrending stock? Am I in a sideways trending stock? Uh, I need to find a bottom. And it looks like $13, $12.50 has held as a bottom in the past, but I want to make sure that that's a real bottom. I could see buying some American Airlines right now, and holding on to it as especially the holidays approach. Um, and if, the price jumps up to 15, $16 and tops out there, I could see selling some call premium. If it goes higher, if it goes to 17, 18, or reaches its high of $19 again, I could see just selling that stock at a profit versus trying to sell premium. So sell premium if it marches up to the 15, $16 range. If it goes higher, 17, 18, 19, just sell back the stock and make that into a directional trade. Um, Earnings is coming up, so it might be worthwhile to wait to do anything until earnings is released. Earnings is going to be October 19. So this might be a trade that you do from end of October through, as long as it takes. It could be a trade that you could pull income out of for the next 5 or 6 months, or just let it self adjust. But I think this is a good one. They're not giving a dividend, so let's check to see if there's a way for us to do leverage. I probably want to go out maybe again to that June, or possibly they have a September option, or you can go out to January 2025. Use the same formula that I was talking about with Roku, which is let's take the extrinsic number and divide it by the mark number and find one that's around 5%. So I think that might be this $5. So instead of paying $13 a share, let's pay more like $8 a share, get a little bit of a discount, use a little bit of leverage. Great bid ask spread telling me that people are trading this one that's deep in the money far out in time. So pick up contracts of this stock when you're ready, and then you're ready to either sell that back, make a profit. Again, if the underlying reaches 17, 18, 19, you'll make a profit with that leverage involved. Or if it stops at 15 or 16, sell your calls and start making some premium every month. Start making some income off of that back month option.
Yeah, and this is a sweet price point, right? Like
Yeah.
$12 to 15, up to
Y-
17, up to
Just
19. Definitely options friendly.
look, all the airlines have the same pattern. United Airlines has the same pattern as American Airlines, the same sort of general chart look. But United Airlines, you're right, is trading up in the $40 range. So if I had to choose, let me see what Delta Airlines looks like. See? Yeah, they're like mirrors of each other. It's almost like it's the same company. So, back to American Airlines, this is the most affordable. I like where you're going with this. Let's wait for a nice bottom to be formed, and let's consider using leverage instead of the stock itself.
Yeah, and I'd be curious to see what the inverse correlation is to oil, right? Oil
Mhm.
prices, stock price, and now they're starting to pull back a little bit. So, uh, great opportunity, great name. Thanks for the call out, and we'll keep an eye on that. All right, AJ. Heading into the fourth quarter, right?
Mhm.
The fourth quarter just began. Fall is in the air. Um, what should we be thinking? How should we be positioning ourselves into the end of the year? What advice are you giving to any of the new people coming into the program?
I mean, we're getting a lot of bottom signals. And so that's typically when we like to buy stocks in order to sell call premium. But I think that you need to be more short sighted on that. So I don't want you to be thinking that you can do 5, 6 month, 7 month trades, because I, along with Serge, our guest from 2 weeks ago, think that the long term 2024 is going to be another major correction. And I think that investors are going to lose their optimism. So we shouldn't expect to stay in any of our trades that have bullish initial covering positions. And we should be looking for some opportunities for getting into the opposite trades. These are the covered puts and the bear put diagonal debit spreads. I think that's where we're going to be traveling for 2024. Just keep that in the back burner. I think through this holiday season, we're safe with our bull trades, but let's not think that they're going to last very long.
All right. Great advice. For anybody watching, listening for the first time, if you are interested in checking out AJ's workshop, the link is in the chat. If you're interested in taking a look or trying out the indicator, that link is also in the chat. Head on over to the website and sign up. If you've enjoyed the broadcast, feel free to hit that like, hit that follow, hit that subscribe button. We certainly do appreciate it. We're doing our best to provide you with the quality content and the opportunities that you need to become a successful investor. And with that, AJ, heading into the weekend, any final words?
Have a great fall, you guys. Beginning of fall. Enjoy it. The weather's getting tolerable.
I agree, although it's about 94 in my territory today. So fall is slacking in these parts. But we'll deal with it as it comes along. So thank you, AJ, for your time. Thank you, everybody, for tuning in. We'll catch you guys next week.
Take care, everyone.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.